let's get started. Hello, everyone. This is Prisha Kinsey. I am your third vice president, which is your education chair, bringing you education to CAREB, making sure that all of our members get some value. We are very big about value. We also have Madam President on the line here, who we definitely want to get a few words from before we get started. Go ahead, Madam President.
Thank you, Prisha Kinsey. My name is Rhea Cotton, of course, your president for 2024. And I am so excited that we have with us today PNC as our new Onyx Waterfall sponsor. And why is that so important to CAREB? It's because that we work together united as a state, supporting all of our local boards, our 11 boards, soon to be 12 across the state. And so I am so pleased that PNC saw the vision that we had on the state level to where when we represent our community, when we represent our members, when we provide member benefit, it's to basically waterfall our blessings down onto the other 11 boards. And so PNC has joined us in incorporating their sponsorship to not only support us on a state level, but you will be hearing from them on all levels for our local boards. And this is really important because it's about the work, right? So we talk about information and what affects our industry on the state level for CAREB, but we also want to always support our local boards. And so it was important for our board of directors to say, how can we work to give back to the local boards locally and actually touch the people that we are here for and that our mission is surrounding around. So it's not just about us, it's about the community. And we like to thank PNC for embracing that vision and understanding that vision, that it takes more than just closing deals, but we have to educate, we have to empower, we have to help with money management. There's so many different facets of our organization that we need support in, and PNC has joined us in those efforts. And so I want to thank you guys again today for being a part of CAREB.
All right, great. And that being said, we are going to start our presentation with our PNC representatives, Deborah and Will. So let me know what you would that ready to go, Deborah?
All right, let's go waterfall. Waterfall. All right. Next waterfall. Okay, so here's what we have on the agenda. No. One down, Parish. One back. Here's the agenda. One more. There you go, right there. What we have on the agenda today is a little introduction about PNC. So we'll give you just a little overview of what who's PNC, what we do with our realtor partners to help you all be more successful. We have our community lending initiatives, which is at the top of everyone's mind, and affordability. We'll do a little bit of a deeper dive into the PNC products and programs, as well as go through some like buyer tools, and we should have enough time for some Q&A. So that's what it kind of looks like over the next 45 minutes or so, and we can go waterfall. PNC overview, one more waterfall. Okay, so one more waterfall. So a little bit about me. Okay, so I have been in the business for more than 3 decades, over 2 decades in the Bay Area, all in residential lending. I've spent my last 7.5 years at PNC, and I'd like to say that I manage top performing teams throughout Northern California and Seattle. I'm originally from Boston, and I relocated to Northern California back in '97, and it's been my home ever since. I love it here. So some of my hobbies are I love hiking, exploring the West Coast in my camper van. I have a 20-year-old son, which keeps me busy, and I have a dog that keeps me even busier. So that is a little bit about Debbie Byrne. We're going to hear about Will in a little bit, but we're going to keep rolling. So we're going to go waterfall. All right. So where is PNC? And we'll go one more slide, Parisha. We are a national bank. We are the 5th largest bank in the country. We have a bank footprint coast to coast. We are represented in 30 of the top markets in the country. We have 60,000 employees. And everyone's like, yeah, that sounds great, Deb, but that doesn't mean jack to us. Well, what does it mean to California? We love California. okay? PNC came into California as part of the BBVA acquisition a couple of years ago. So if you saw BBVA branches and you see them anymore as like PNC branches. So what does that mean? Like, we have about 30 branches that span in Northern California, meaning like the Bay Area, the Central Valley, going all the way up to the Sacramento area. We got about 30 branches there. And then we got another maybe 27 more focused in the Irvine area of Southern Cal. I don't know if I have any SoCal folks on the phone, and some San Diego. But we want more, and we will continue to grow. So if you see the branches, that's kind of where we're at, and we're just super excited to be here. I'd say PNC is not new to California, because if you noticed, I've been at PNC for over 7 years. And so we had our business lines here. So we had our mortgage team here, our business credit here. It's just that what happened with the BBV acquisition is that we got now the bank branches here. So now we have, kind of like that Main Street focus of being in California now. Waterfall. Don't you love how I say that? Okay, so, I think this is an important thing to talk about, right? Like, what are we known for, right? Like, we have a number of accolades that third parties have rated us. And I think these are important to kind of, talk about, because it does show you a little bit about PNC and who we are, right? We were voted, best mortgage lender by Bankrate in 2023. Best mortgage lender for first-time homebuyers by NerdWallet. Diversity. There's a number of accolades that that we're particularly proud of. One that's not on here is that I will get added is that we're actually known to close faster than our competition by a couple of days. Now, I can't put that on a slide because they didn't allow me to, but we are closing our deals in an average of 15 days. So for those of you that need fast closes, we're your friends. Waterfall. Okay, again, a little bit of overview about our PNC values. These are things that we live by that you would expect from, honestly, any bank that you're doing business with. But we really take these to heart, right? Doing business with integrity, diversity, inclusion, customer focus, performance, quality of life, respect, teamwork. That is all of what we are about, and we live that every single day. Waterfall. Okay, so what does PNC do for the community? And we're going to tell you a little bit about this. I am proud to say that PNC established their Grow Up Great program 20 years ago. So we have run this program for 20 years. And what it is that, research has shown that the most important time in a child's development is between the ages of 1 and 4. Okay. And what we do is that we have donated millions of dollars and support this Grow Up Great program, which is all about early childhood education, because we feel like doing that, we set our kids up for success, right? And it's something that we're extremely proud of. We actually have a couple of events going on, part of our Grow Up Great program in the Bay Area. We have something going on at the Discovery Museum, and I'm sure for you folks that are familiar with Oakland and Fairyland, we also do an event there, and I think there's an event that's coming up as well. I'm happy to send anybody any information if you want to know about it, because we would love to see you. Yes, absolutely. Waterfall. Don't you love how I say that, waterfall? Okay, so what's in it for you? What's in it for you? Let's go waterfall again. Oh, I have these slides, and I got to get back to this one because I had the slides in reverse, and I apologize. That's my miss. No, stay right there. We're going to I wanted to kind of touch a little bit more on the community lending that PNC is committed to. So as we saw, the Grow Up Great stuff, but about 2 years ago, we came out with an $88 billion commitment to to the community, for affordability, for education, for small businesses. We're about halfway through that 88 billion, and more than, well, about half of the 88 billion is for lending, like for residential lending. But we do have a significant segment for small business owners, and I know many of you on the call may be a small business owner of your own real estate shop or whatever, and we'd love to put you in touch with like folks in our community group. And if there's an opportunity for us to help you, grow your business in this way, we want to, be a part of that. Will, is there anything else I want to touch on that side that you think?
No, I think it was somewhat comprehensive. I mean, what sticks out, one, the $88 billion community benefits plan is a common plan with many lenders today. Ours is probably the largest, and it is actually impacting communities of color. That's been a distinct intent with it. And, as Deb stated, 47 billion of that 88 is relegated to home ownership and products and programs that promote home ownership. And so we want to make sure that we take advantage of that in California. We haven't really hit the iceberg as much as we can in California, particularly with us and CAREB and the home ownership initiatives that we have nationally with NARAB, which filters to you guys. And so just wanted to point that out, that it is not a propaganda move. It is true. We are donating, committing, financing, and doing quite a few things with that money. And so thanks, Deb, for bringing it up.
Awesome. Okay. All right. So now we're going to be, what's in it for you? What's in it for you? Let's go waterfall. Okay. So, we have a couple of resources available, for our real estate partners. We do, I think, a very, very good job with a newsletter that gives you relevant industry news that you're able to post on social media. That's part of like a regular drip campaign. We have what we call a PNC Agency Alliance, which provides you additional resources, and it's kind of like it's a step-by-step process. And actually, the PNC Agency Alliance is about to be revamped, so I can't really share a ton of information, but it's something that I'm going to get back to you guys on, because I think that the new rebooted version of the Agency Alliance is going to give even more value to you as a real estate professional. And if anybody wants to be added to the newsletter, then I just, Parisha, if you could send me a list of email addresses, and I'm happy to just add it. And if you want to opt out, you can always opt out later, right? Like, we don't want to spam you. We really want to help you. And I read these articles often, and I find them very, very helpful. Waterfall. What else we have? We have, marketing material for your open houses. I mean, the rubber meets the road when we're in an open house, right? We're all about how do we engage clients effectively and help you put that home under contract, or help you find that buyer that is going to, get that home under contract. So the resources, we have our open house flyers, we've got, sign writers, we can do, posting of events. We can do, sponsoring an open house, like, bring a cookies or breakfast, all that stuff that you guys, I'm sure you're familiar with. We want to help you with that, right? We absolutely want to help you with that. So, so a little bit more of like what we can do to help you. Waterfall. All right, so what do we have for borrower tools? Let's talk about that a little bit, because, taking the borrower through this process is extremely important. And, we focus on three things, right? Affordability, pre-qualification, but I really want to say that's really pre-approval, right? And how do we create a smooth process for the application? You can't close a deal in 15 days if you don't have a smooth process. You can't. And I'm going to tell you, and some of you might have closed deals with PNC, maybe, for those of you who don't, I think you're going to be pleasantly surprised at our process and what we do with the customer to get them to the finish line whenever you need it to be. If you need it to be 20 days, we'll make it 20 days. If it's 30 days, it's 30 days. But if it's 15, and a lot of these deals are coming in between that 15 and 17-day mark, that means everybody's running at a high level. clients engaged, realtors engaged, the loan officers engaged, and then, we've got a back office that's going to absolutely support that. Waterfall. So what do we do with the buyer? What do we do? Like, we take them through, we first start with just an online application. And, some clients, if they don't want to do it online, that's fine. We'll do it for them, right? We do an online application, starts the application. We give them a quote. We start building scenarios. They're going to submit their loan documents to us. We complete like all the required tasks for the loan. And, and all this can happen literally in, I want to say 15 days. I've done deals in 12. I don't like to do deals in 12 because that's pretty hard. It means you got to be completely out the gate. 15 days is a good sweet spot for us. And if I didn't touch on this in the previous slide, I want to emphasize the best thing that we can do for our clients is get our clients fully underwritten. Fully underwritten. So we do fully underwritten pre-approvals. And it doesn't take it takes 2 or 3 days. And that's really like, it takes the client longer to give us all the information than it does to send the documents in. And usually where we have a credit approval, fully underwritten credit approval from the underwriter in 1 or 2 days. Okay. So we recommend that all of our clients go through this process because I don't know if you've had any surprises when you've had pre-approvals just with the piece of paper that wasn't worth the paper it was written on. Because if somebody gives you a pre-approval in an hour, it's not a pre-approval. It's a pre-qual. It is a pre-qual, and and the loan officer doesn't have lending authority or underwriting authority to say that this loan is absolutely approved. Most loan officers are pretty sharp, and they can probably read between the lines and know if a deal's going to work or not. But we all get surprised because the clients say, I make this, but they make that. I have this down payment, but it is coming from here, 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 and here, right? So, especially a lot of our first-time home buyers, they need that little bit of extra hand-holding. And it's more the conversation with them is the do's and the do nots, right? Do not buy a car, right? Don't open credit. Don't close your credit card. You know what I mean? Don't move your money around, right? Like these are the things that really cause delays that when you're working with somebody at PNC, we're going to coach them through this and we're going to talk about this right up front so we don't have a deal blowing up at the end, right? Because nobody likes that. And I'm sure everybody's on the phone has experienced it at one time or another. Waterfall. All right. So a lot of clients these days want a digital lending journey. We let them, right? Like, they can do a lot of this, but that's still not taking the, the human out of the loop, right? You need an MLO that can, walk the client through what are the documents that we really need. We don't want too much because if we're doing a conforming loan, we get day one certainty. If you guys don't know what day one certainty is, it's like, we might have an appraisal waiver that we don't need. We get their income and their asset validated through the technology that we have, and we don't need anything else. But if the client then uploads something that we didn't need, that just knocked it out. And now we might need more documentation. So there's a lot of benefits to doing some of this stuff digitally, but it never takes the human out of the loop. It never takes the realtor out of the loop. It doesn't take the MLO out of the loop. Absolutely not. MLOs have got to be part of every step of the process. So we have a successful close. We have a happy customer, happy agent. That's what I say, right? If the agent's unhappy, I'm unhappy. So there we go. All right, waterfall. All right, so I know I kind of went through a lot of this quickly. I'm actually going to hand it over to, did anybody have a question or is that you, Will? Okay, I'm going to hand it over to Will, who's going to just do a little bit, a deeper dive in our products and programs. And then we'll open it up for Q&A. Over to you, Will.
All right, so Deb has patented waterfall instead of next page.
That's right.
So very good. Thank you, Deb, for sharing with us. I'm Will Hendricks Griffin, and I'm the Affordable Lending Manager nationally for PNC. I saw quite a few of you guys in New Orleans a couple of weeks ago, and so it's good to see some of you again. And I want to put some some emphasis on what's affordable and what's not affordable is all relative. And California affordable is not Cleveland affordable. And so to that point, many of your loans may and probably will exceed the 766,000 conforming loan limit. And that does not make it unaffordable. In California, it just makes it more. And so we are not only sensitive to that, but we have some products and programs that could actually benefit borrowers at and below conforming loan limits. Another thing that I want to make an emphasis on, many of our peer banks, including PNC, we can't necessarily group every African American or Hispanic borrower into the low or moderate income box. That's not the case. It's clear data that 5% of the Hispanics in this country are millionaires. And if you didn't know it, 8.8% of African Americans are millionaires. That's about 2.3 million people that are millionaires that look like me. I'm not one of them, but that happens to be the case. And so to that point, we want to make sure that affordability is kept in the proper perspective. And to that point, we got a lot of stuff at PNC, and many of you guys probably don't know. Naturally, we have all of the products and programs through the GSEs, Freddie Mae, Freddie Mac, FHA, jumbo loans, and all those things like that. Essentially, if a borrower is mortgageable, we have a product for them. And we can get them to the table if they are mortgageable. And that comes from fixed to ARMs to jumbos, VAs. We have specialized loan programs, which we're going to talk about a little bit, including our portfolio product, the PNC Community, as well as rural housing and VA, which you all may or may not know are 100% financing options with those programs. Next page, or waterfall. I'm kidding. So I'm going to go back to work like waterfall.
That's right. You got to get it right.
Exactly. PNC Community Loan. This is a product that I have helped create about 13 years ago. This is PNC. We used to call it the PNC National PNC Community, but this is the PNC Community Loan. This is our portfolio product. And so the differentiation with this, the real basics about this is a 97 LTV, no mortgage insurance, fixed rate product, and it is geared for borrowers at 80% or below the national median average for incomes. And so I don't know what that exact number is in California off the top of my head, but this is some of the things that are really nice about the product. $500 has to come from the borrower. That's it. The down payment can come from partially from us, from an outside entity, or the postman, as long as we can validate. I'm a firm believer in this. If a borrower does not have $500, they probably don't need to buy a house. Not at this point. There's no MI. Some of the back draws, we got a 43% back end. I do have some flexibilities with this. Another beauty to this program is that we can do flexible underwriting with it because we don't sell it. And so I can bend the crap out of the rules, but I can't break it. So I can do no credit score with this program. I can provide alternative forms of credit. My credit score minimum is 640. It used to be 700. We reduced that about a year and a half ago. And I do love the fact that the builder, the developer, a gift can furnish the down payment, and PNC will also subsidize the down payment. Now, depending on the loan amount, in many cases, the borrower can come to the table with little or nothing down, except at $500. So a good program. We kill it in the South because they sell it as the $500 down mortgage. Marketing ploy, but it works. Rural housing. So rural housing, we do have some areas in California that are out there in the country, in wine country and some other areas. That's 100% finance, and we can do those things, and that's no down payment. And we can do that with a refinance or a purchase, including the PNC community. Wanted to let you guys know that we can do that as a refinance or a purchase. Okay? That's conforming loan amounts at 766. Deb is fighting vigorously to get high balance on some of these programs, and she typically wins when she fights. So some good stuff is coming to California. Waterfall. I'm killing myself. We do have specialized loans as well, which are GSE programs. Home Ready and Home Possible for your public service workers. These products require 3% down. In many cases, we can do some expanded ratios or trailing income based on what is best for the borrower. Now, many of you guys are not living in the loan officer space. Some of you may have your hands on it a little bit more, but Fannie and Freddie, they differ from, I won't say night and day, but it depends on what the weather is or what the temperature is, or where we make recommendations, whether the borrower should go to Fannie Mae or Freddie Mac based on what's best for them. Our loan officers are really good. And I don't know one lender that will say that their loan officers are not good, but I'm going to speak with some objectivity. We have some truly serious mortgage practitioners that know how to package and know how to make the right recommendation for the borrower to get them to the close as quickly and as efficiently as possible. And I say this again with all objectivity, the folks in California know what they're doing, and they know how to package, and they get them to the close and get your commissions and the borrowers in those houses fast. So whether it's Home Ready, Home Possible, FHA, PNC Community, they'll know which and what to recommend at the right time for the right borrowers so they can have sustainable and efficient free home ownership. Next page, please. Now, we got a bunch of grants, and we are adding and expanding and doing several things, and they range from 3,000 to 10,000. In addition to our grants, we have a 1% pricing concession, which is an additional credit that goes up to the conforming loan amount of 766. So we can give you a grant up to 10 grand in certain areas, plus a 1% concession, which means PNC can contribute to a transaction up to about $17,500. Now, here is the difference between us and them as it relates to our grants. My team manages grants. We get them out the door in 48 hours. I have been, I won't say fully over grants, but essentially any grant that is distributed, it says on the behalf of William Hendricks Griffin and PNC, and we have an awesome team that gets them out in 24 to 48 hours, and we don't have to worry about anything else with that. Now, we can stack our grants with CalFed and CalFACA and all these other things that may come. And so we don't have control over their turn times. I do have control over mine. Now, I can utilize my grant with Home Ready, Home Possible, PNC Community, FHA, and we can do up to 6% of interested third party with FHA. That includes my grant, but with our conventional and the PNC Community, it does not matter. They have their 3%, but my grant does not count toward that. So we can stack some things with that. Here's another thing. This is 80% of the median income. And when I talk about special purpose credit, which is a totally different animal, a few different rules with that are great. But here's something that, again, is the beauty about my grant, our grant. This is a non-recourse grant, meaning if the borrower decides to come back to Rio or Parishna and say, you know what, we want to move up and it's just year 2 after they bought that house and they say we want to get another one or sell it, I'm not going to ask for my money back. It's fine. And if they requalify, I'll give them another grant. Why? Because we get CRA credit for both the transaction. I'm not going to bang them when they get rid of it or put a lien on their property. Secondarily to that, which I think is a differentiator between my grant and some other lenders. Many lenders, including ones that start with C and another one that starts with a B and ends with an A, when you get a grant from them, at closing, they're going to give that borrower a 1099, and they're going to tax them on that grant. We don't. It is a true grant, which is a gift. We won't put a lien. We won't tax them. We're not going to say this is one thing and it means another. And we get them out in 24 to 48 hours. So we have a very special thing with this, and we're not in trouble forcing us to have to do these things. This has been happening for the last 13 years. And another thing that, again, is a big proud moment of me again, I've been with PNC, I think I said 14 years, it'll be 15 in a little while. I've been over affordable lending for the last 13. Two things that are notable. One, we received outstanding CRA ratings. That may not mean much to you, but it means something to me. Only 1% of the banks can state that in the country. We happen to be within that 1%. Two, we've never ran out of grant money. We get real close to the gate, I'll be honest. but we have not run out. So I don't have concerns that at one moment we're doing an application, you got your contract signed, we're saying we're going to give them 17,000, and then, oops, we've run out of money. We don't do that. We honor what we say, and then we need to go back to the committee and get more than we do. All right, next page. FHA, which we've talked about. We have a 1% pricing concession that we can add with FHA, and that puts us in the top 3% of the lowest cost, lowest rate FHA product today. In addition to that, I can add my grant and my concession to that and make it only cost effective, cost effective and efficient. Okay. All right. So again, FHA, my first loan at 23 years old in the South Side of Chicago was an FHA product. It was full of fees, and I still got my loan, and I refinanced it and got it lower, and God is good. And so it's a needed product. It has its lumps and bumps, but many of us utilize it and can do some good things because I can go up to a 50% back-end ratio. My grant, my money can come from a gift, 3.5% down. I can still stack my own grant with it, and it's a useful product as appropriate. And so we have a good one, and we can lower the fees on it. Next page. Now, we talked about my grants. That's, again, at 80% of the median income. We can qualify borrowers with a $2,500 grant, which comes from Fannie or Freddie. We can use that in conjunction with my grant, which ranges from $3,000 up to 10 grand, depending on what the area is. You guys have a distinct advantage in California because you probably have a minimum of 5 and go up to 10. In most of your markets, we can do the special purpose credit program up to $10,000. And that is for majority minority borrowers with an emphasis on people that look like me and sound like some others. And so to that point, we are serious about decreasing the lack of home ownership within the African-American community. This is something that I know is near and dear to CAREB's heart as it is to mine and NAREB. Today we're at about 43.4%. That number is still going down as it relates to the Fair Housing Act that was passed about 50 years ago. The Hispanic home ownership rate today is at about 51%, and that's been flat for 3 years. We are sensitive to that at PNC, and so we came up with the special purpose credit program for many of these areas where we have not done our best, lending to those people of color. And so we are committed to it. We are not ashamed of it. We're ashamed of our numbers. And to that point, we're going to put some dollars to try to help some folks. In addition to that, we can go up to 140% of area median income in these eligible markets that can utilize the special purpose credit program. This is not where they need to qualify as low or moderate income. They are people of color, particularly African-American and Hispanic. We got a bunch of money for you. It's free, plus the 1%, additional. And so that program is going pretty well now, and I am glad that we have your undivided attention, I hope, to make sure that you guys in California spend this money. They spending it in Atlanta and in Philadelphia. Take the money and run, please, in California. All right, next page, please. Oh, I'm wrapping up, and my voice is hoarse. I am going to turn it back over to Deb so she can wrap us up, and we have a few moments for question and answer. Oh, as another caveat, we got a lot of security systems here at PNC, and so in Zoom, I can't see any chat. So I don't know if there are questions or comments or even applauses in the chat. I can't see them because we're scared to get hacked, so to speak. So anyway, just want to let you guys know that. Deb, back to you.
Oh God, thanks, Will. That was awesome. You know, when you were talking about the low down payment, you know, we're just wrapping up a deal in Oakland. It was like a $540,000 purchase price, 3% down. You got 5.375. You know, because of the 1 point subsidy, bought the rate down and the 10 grand. And the seller gave him some money too. I mean, so this borrower really, like, he just so wanted a house, and we had to put him in the Home Possible program because of the the flexibility. He was a flexible wage earner. So there was a lot of like, you know, a little bit of this and we were able to get it done. So, you know, like these programs work. We also, I mean, you know, I'm sure you guys all have clients too with 20% down and as, you know, like jumbo loans. I mean, you know, another accolade that I don't think was posted that we've had accolades time and time again for how we execute on our jumbo business. So we're not just doing affordable. We're not just doing FHA, VA, and USDA. We do jumbo too, and we do it all very, very efficiently and effectively. And it's something that, you know, like we want to work with you guys on depending on what your client situation is. Maybe, you know, we have the luxury of, let's say a client's putting down 20% and the loan amount is $800,000, right? That's super conforming, right? That's a super conforming loan. We can actually put that loan in our portfolio. And so now they get a better rate. And they get the portfolio rates rather than like, I don't know if you've priced out agency high balance lately, but it's the highest loan out there, right? It's higher than conforming and much higher than jumbo. So these are the things that we would strategize with you on, like depending on your client situation. Maybe it's a 15% down program. Maybe they need money from a 401k loan. I mean, these are the things, like I said, we work with your client and you, because I'm assuming that you guys all want to be involved, which hopefully you do. And if you don't, just know that if you give us a client, we're going to take it from there, and we'll be calling you when the appraisal's in, the docs are out, the client's signed, and they're about to get their keys. So that's when you'll probably hear from us. So okay, wow, we went through that in like about 40 minutes because both Will and I talk fast. Because remember, I said I'm from the East Coast. I talk fast. So we want to open it up for any Q&A. We're happy to take questions.
I think Madam President has her hand up. Go ahead, Madam President.
Yes, thank you guys for that awesome presentation. So I have a listing that is coming up in East Oakland. I had a couple of questions. One, where do we find your loan consultants for our respective areas, one, and two, where can I get the $7,500 sign for that property? Third question is, with your portfolio 3% down program, I know it's 80% AMI, but does it also have a caveat for the actual census tract of the location of the property as well, or is it just based on the borrower's income?
Yeah, I'll answer the PNC community question.
Yep.
If the borrower is purchasing or refinancing in a lower moderate income census tract, I don't care how much money they make. The AMI goes out the door. So that doesn't matter. Regarding getting signs and marketing for grants, I'll let Deb and her crew, because they are there in Northern California,
Yep.
they can assist with that.
For that, I'm sorry, for that area, do you want us to look it up online? Do you have your own link for the property? How do we find out if it falls within that census tract?
All I need is you to send me an email with the address, and I'll just look it up in our tool, because it has I don't know if do they have access to that tool, Will?
FFIEC.
Yeah, but will that show majority minority as well?
Yeah, we can. It'll show that, or if you can't navigate through it, we have the not CRA. We have CRA Wiz, and we have Ratazoom. Be that as it may, whatever is more comfortable for you, Rhea, send us an address or look it up in FFIEC.
Yeah, I mean, if you send me an address or text me an address, I'd have it to you in like 10 minutes. So you don't have to even go through the bother of that. As far as ordering the marketing materials, it would be up to like me or the local loan officer too. I do have several loan officers that kind of work that Oakland corridor. I wish I could say I had loan officers in every single market, right? Like that literally live and work in that market. I don't, right? But we lend in all markets, except I can't do a cash out refi in Texas, and I can't do a SEMA loan in New York. Other than that, loan officers are licensed everywhere. Okay. And the way our systems are built, like once you put the zip code in, it auto-populates the fees. It knows all the stuff. So it's like, so we have a lot of loan officers that do a lot of out-of-state loans if you happen to have an out-of-state loan. Now, like, so Rhea, to your point, I've got 2 or 3 loan officers that I could send you 3 names, and I could send you their links. You could take a look at them and you could decide who you want to work with, or I could just introduce.
Yeah, I was just kind of being facetious because I wanted all of your loan officers to connect with our
Absolutely.
members. So
We're
if we
going to
could
figure that out. We
yeah.
are.
Yeah, and and this is and that is the work, right? Like our
Right.
first step was being part of this amazing organization, and we are just as thankful that you guys wanted us as hopefully you guys are thankful that we wanted to be your partner. But we're building too, right? Like like this market that we just came out of, this has been the worst 2 years for any loan officer. And I know you guys are on the real estate side, you felt the squeeze too. But for loan officers, this has been the worst 2 years and for many in their careers. Because if you remember the financial crisis back in '08, what saved our bacon in '08? Foreclosures, unfortunately, and HARP loans. That saved loan officers. We didn't have any of that. We had high rates, low inventory. High rates, low inventory. And if you've got loan officers that were honestly used to selling these really low rates that we had that were just the lowest rates that the industry has seen, a lot of them, didn't make the shift. That's why you saw a lot of loan officers go out of business. Or I'll look at loan officers and they look terrible on paper because they haven't done a lot. But I know it's like if they've got a decades of experience, they had 2 bad years. I'm hiring. So if any of you know of a loan officer in your market that you really like, I would love to talk to them because we are hiring and we are growing and we want to be more representative in the markets that all of you in. That's really the truth of it. So I hope I answered that question a little bit better, Ria.
Thank you. Thank you, Deb.
Okay. So one of the questions that I was asked was like, the agent's commission, like the buyer's agent's commission, big hot topic, right? Like, how do we look at that, right? And I will tell you, it's all being looked at, just like it's all being looked at on your end, and things like can sometimes change overnight. For now, let's say if you negotiated with a seller to pay the buyer's commission. If you did that, right? It's an optional, believe it or not, it's considered under optional fees on the HUD, and it's not part of the max contribution. So if the seller was going to give him 10,000 anyway, and you negotiated another 10,000 for the buyer's commission, and that ended up being over the contribution allowed on the loan, it's not considered, it's stripped out. So I don't know. Did that kind of answer the question that we talked about a little bit, Ria?
Yeah, definitely. Thank you.
Okay. Okay. Wow, you guys are really quiet today. Isn't it nice out there? How's the weather?
It's good. Good question, and I might have overlooked it, and I apologize. So, but do you guys have a non-QM product?
Yes, we do. I mean, when you say non-QM can be a lot of things, right?
Yeah.
Like we have IO products, we have products that can go over 43%. That's considered non-QM. It used to be anyway. They might have stripped that out. So we can go to DTIs up to 50 on our portfolio. We can do IO. Again, it just depends on borrowers' reserves. Like, we like reserves. We like FICO score when we're really pushing the pencil on the jumbo. On the conforming, we follow agency with no overlays. We have very few overlays. We just follow DU findings or
okay. I neglected to mention also we'll be launching an I-10 program within the next 30 days as well. For those of you that may run into opportunities where folks may not have a social security number, but they're a citizen, they're here, they're working, they're paying taxes. That's going to be a big deal in many of the communities in California. So I just want to let you guys know that as well.
Okay, so let me rephrase the question. And I guess the better question would be, do you guys have a bank statement program? Maybe that's a more direct question.
We're not going to be the end all be all. We have a lot, but we don't have a bank statement program. And we all have buddies in the industry that do those type of deals, right? But that would not be one of them. I wish, Parisha.
Good question.
Good question.
It looks like we have a hand up. I think Helena, you had your hand up, and then LJ.
Oh, thank you. Parisha did answer my question. First of all, it's really nice to see the programs that you're offering for the community, and to know that you plan on, growing and having presence here in this area. I think I-10 is fantastic. However, we do have small entrepreneurs such as barbers, the stylists. The bank statement loans are not just for the big business owners. So are you planning on having any type of non-QM product for those who really have the affordability for home ownership, but they don't necessarily have the tax returns to support that?
I can take a stab at it. We constantly look at what is a need. We have the reputation of being a moderate risk bank, but there's a time where we did not do I-10s. There was a time where we did not do contract for deeds. There's a time we didn't do several programs that we do today. And so I won't say no, Helena. I'll say yes, if. And what that if is, I don't know yet, but that's something that we'd have to look at, particularly if that's a product or a conduit by which it's a demand from the market. And so we'd have to see.
I appreciate that. I think a lot of us spend our time, educating our clients and business owners on the importance of filing tax returns that support, income, so they can become homeowners. However, it is nice to have the alternative. So thank you for that.
And then LJ had her hand up, Parisha.
Great day. I may have missed it, so I'm going to just come in and ask anyway. What kind of commercial products do you offer, whether small business or jumbo, like very large commercial products? What do you offer, if you have any?
Deb, you or me?
Yeah, well, I mean, I'll let you speak to it first, because I refer to this dude in my office, and if he can do it, he can do it. If he can't, he can't. So that's not my line of business, unfortunately. But I don't know, Will, if you could speak to more of it.
Similar answer. We do have a total. We go up to 4 units on our side of the tracks, but we do have a commercial whole department, so we can make referrals to you. I can't speak to their products and programs with certainty, so I won't try, but we can definitely refer you.
I appreciate that. Thank you so much.
Okay, great. Oh, Elena, you got your hand up? Okay, go ahead, Elena.
I just have one last question. So, after listening to all of your products, I guess my question to you, especially Deborah, since you're here in our area, if you could pick one of your products that you feel like no matter what, hands down, this is our product, and I know you have jumbo loans too, right? What would it be? Where you're like, this is it. This is what we do. This is what we do well.
I mean, our jumbo underwriting it beats our competition all day long. We don't over-condition our files. We can close fast. And I'll give you an example. Client has $1 million in a Schwab account, right? It's invested, and he's going to be using some of that for his down payment and his closing costs. Well, most lenders are going to require proof that they sold the asset, and that it transferred, and that it cleared, and all this other jazz. We don't ask for that. Like if a client has 125% of the assets, we don't prove liquidation. We just assume that that's where it's coming from. I mean, it's got to come from that account at the end of the day from title, right? So that's just like, that's one little piece. We live in the Bay Area with a ton of clients that work in technology, and they move around, and they have RSU income as part of their big part of their comp. And so when you move, then what a lot of lenders then will not give them credit for that RSU income, because they haven't been at the company long enough. Where we have a program in place that we actually utilize the RSU income. So I would say, like, that is definitely a shine spot on the portfolio side, and a fast close, our fully underwritten pre-approvals. It's a culture here, right? Like, it's the way we underwrite it. Like, I can pick up, like, this is, I dealt with a deal, as I said, in Oakland, that was home possible. And guess what? The insurance came back and it knocked the DTI over by 50%. Well, I'm in the 11th hour. I was on the phone with the underwriter and we came up with solve. So like it's that kind of stuff that like it's hard to translate that on paper because until you work with us, you won't see that, right? And I think our affordable products are competitive. I mean, 5.375 on a 97% 30-year fixed rate loan with a $10,000 grant, that helped that client get in that home. Did that answer the question?
I think
yeah,
someone asked what is an RSU, a restricted stock unit, often is a part of their compensation. I think someone asked that question, but yes.
Yes.
So for your jumbo product, just to follow up with that, if they weren't liquidating their retirement, would you allow for a portion of that to be distributed to count towards the qualifying income?
No, say, okay.
So if they have, $400,000 in retirement and they're not going to liquidate that, but they are going to take a portion of it. They are going to withdraw a portion of it.
Oh, yeah.
Yes.
So if they take a loan on it, we're not going to hit them for the payment. Is that what you mean?
No, would you use it for qualifying income? If they decided to give themselves a distribution, would you
You know what?
that?
I'm going to say it depends. We have some pretty liberal distribution rules.
Okay.
They just recently changed because Fannie and Freddie kind of tightened it up. So I do it both on, more on the portfolio side. So if you have a specific scenario, maybe we can just have a quick chat and I can just walk it through.
Thank you. I appreciate that.
Okay. Yeah. But we do that. And they don't have to be of retirement age. We will do distributions.
Got it. Thank you.
Okay, I have another question, and it's in reference to the grants. So for the grants, is that only for single family dwellings, or will that also apply to 1 to 4 units if they were to apply for the grants and they are first time home buyers?
Grants are typically for single family dwellings, but if we're in a market where a 2-unit is common, so again, I'm in the Midwest and the East Coast predominantly, and there's 4 units. My first property, that FHA I talked about, 4 unit. Be that as it may. If you're in Chicago, you're in New York, and you want to do a 4-unit, I can do that at a 95% LTV with the grant. Okay. California, depending on where it is, if it's a common practice to have multi-unit or 2 units, we'll add a grant with them. I mean, the borrower qualifies, sure. And I can do exceptions.
Okay, thank you. All right. Is there any other questions that are out there? These are very, very good questions. And thank you guys for answering these questions. I'm getting a wealth of information. My mind is just thinking right now, like, oh.
It looks like we have a couple of questions in the chat.
In the chat? Okay. Can you?
Yeah, sure.
Thank you. I appreciate it.
First one is, can we get PNC contact information? So if you have an information page, Deb, or you can put in the chat. Is there California ADU financing programs? ADU financing programs?
Yeah, that's a good one, huh? Wouldn't that be great if we all had that? I mean, right now, the only way that I know to finance an ADU is a client pulls out an equity line of credit. And that's the other thing that we didn't talk about, actually. We have a very competitive equity line of credit. So we do standalone HELOCs, and it's called they call it, what do they call it? They call it HELOC.
Choice home equity line of credit.
Yeah.
Choice, HELOC, was you can lock it and then you can unlock it and you can lock it again. You can do it 3 times based on what the rate is. So it's creative, and we do a lot of them.
Yeah, we do a lot.
We do have a loan officer in Stockton.
Yes.
I think I saw that pop up. She's actually coming back next week, but she lives in Stockton. That's Fabiola, who's been with us for quite a while. So yes, we do have someone there.
And then maybe also what we can do is, you mentioned your newsletters. I would love to get your newsletters as they change to include in our magazine and our social media. And then maybe if we could highlight just like a bio or a short intro to some of the loan officers in both Southern and Northern California, because we both have NOR and SoCal on the line. We can highlight them as well.
Okay, that's actually a great idea.
Okay, I think, Parisha, I think we're coming up onto the 1 o'clock hour.
Yes, we are coming up into the 1 o'clock hour. So before we finish up, is there anything else in the chat or anything else you would like to ask PNC? This is your introduction, so you're going to be seeing a whole lot of PNC. So get used to these faces. Let's get to know these other MLOs out there, and let's get it going. As you guys all know, this is our Power Hour. We are heading off into the end of the year, and we are having our state conference coming up in October at the Hyatt Regency Orange County, October 17th through the 19th. We do have a pre-registration. We also have a brunch coming up. Please get your tickets. If you have any questions, please reach out. And if you're interested in coming on to the committee to see what we're doing, it's every Wednesday at 5 o'clock until the conference. Go ahead, Madam President. If you have anything last words to say, please say them, please.
Yes, well, I just want to thank Will and Deb again. I've in my mortgage life, I've been affiliated with both of them, and they're very highly respected. And I appreciate being able to collaborate with both of them. So thank you for being on. And like Parisha said, we're looking forward to meeting the rest of your team. Next week, we're already at the end of the month, you guys. So next week is our Prospecting Tuesday. So every first Tuesday of the month, we prospect. And I just want to let Helena remind you guys of the benefits if you haven't been on, but also on this Prospecting Tuesday, for any local board presidents or any committee members for the conference, Will and Deb be reaching out to members on Tuesday, on this upcoming Prospecting Tuesday, to remind them about the conference, encourage them to register. So be online for that. Helena?
Yes, Helena Jones-Kim, proudly your second vice president of CAREB. And as you know, Prospecting Tuesday is coming up. And here's my question for you. Someone asked me, what is my Super Bowl? What is my Super Bowl win? The end of the year is coming. And so I want all of us to think about that. What would be a win for us? Do you want to spend the holidays enjoying time with your family? Do you want to not be stressed out? Maybe you want to close a certain amount of transactions per year. Please show up at Prospecting Tuesdays, because whatever we're prospecting for on Tuesday, we already know that the payout is not until 90 days. So if you want your November and December to be amazing while everyone else is stressed out, join Prospecting Tuesdays. Let's set our intentions. Let's talk about our goals, and let's make it happen. Because if you're not prospecting, you're not making any dollars. Helena Jones-Kim, your second vice president. Thank you. Invite people, invite people, member benefits.
Okay, great. Okay, then. So thank you guys for all attending our Power Hour. Thank you guys, PNC, again. And you guys have a great rest of the day and have a great holiday weekend. We'll see you soon.
Thanks, guys.
Thank you.